Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Winnebago Industries Inc. quarterly report. Winnebago Industries Inc. offers a diverse range of businesses and services across three primary segments: towable RV, motorhome RV, and marine. The company's product offerings include recreational vehicles, RVs, under the Winnebago and Grand Design brand names specialty commercial vehicles for law enforcement, medical clinics, and mobile office spaces commercial vehicles, as bare shells to third-party upfitters recreational boats under the Chris-Craft and Barletta brand names original equipment, manufacturing of parts for other manufacturers, and commercial vehicles. These products are sold primarily through independent dealers in the United States, Canada, and internationally. The stock price of Winnebago Industries Inc. has dropped by over -9.91% in the past year due to a combination of challenging market conditions and disappointing financial results. The company's shares experienced significant downward movements following earnings reports that showed a miss on quarterly profit estimates, sluggish retail demand, and operational inefficiencies. The decline was further exacerbated by broader macroeconomic headwinds such as high interest rates, inconsistent consumer sentiment, and dealers reducing inventory levels. These factors led to a 27.3% loss in share value since the beginning of the year, and an overall decline of about 22.34% over the last 12 months. The company's stock price was particularly affected by two notable events: the release of fiscal fourth quarter results, which showed a net loss of $29.1 million, and the reporting of disappointing earnings for the third quarter of fiscal 2025, where both EPS and revenue fell short of analyst expectations. These events led to a reduction in full-year fiscal 2025 guidance and further contributed to the decline in share value. The primary drivers of revenue growth and decline can be identified through an analysis of the financial summary. Revenue growth is primarily driven by the increase in net revenues, with a notable contribution from the Grand Design Towable segment. Within this segment, the towable RV segment experienced significant growth, with a 15.5% increase in sales, led by the fifth wheel and travel trailer categories. The marine segment also contributed to revenue growth, with a 2.2% increase in sales. Additionally, higher unit volume and targeted price increases played a crucial role in driving revenue growth. On the other hand, the motorhome RV segment experienced a decline of 13.3%, primarily due to a decrease in Class B sales. The lower unit volume also contributed to revenue decline. Overall, these factors highlight the key drivers of revenue growth and decline, providing valuable insights for stakeholders and business decision-makers. Net income and profit margins show significant improvement. The financial summary reveals a significant turnaround in the company's performance between 2024 and 2025. Net income shifted from a loss of $5.2 billion to a gain of $5.5 billion, indicating a substantial improvement. Profit margins also saw a notable increase. Gross profit margin rose by 15.9% due to targeted price increases, favorable product mix, volume leverage, and lower unit volumes. Operating income margin improved from -1.2% to 2.7%, while net profit margin increased from -0.8% to 0.78%. The key drivers behind these changes were a decrease in operating activities cash outflow and an increase in net income by $10.7 million. These factors combined to contribute to the company's improved financial performance, marking a significant shift from losses to gains. The company is indeed generating positive operating cash flow, as evident from its financial summary. For the 3 months ending November 29, 2025, the company reported a net cash provided by operating activities of $25.4 million. This indicates that the company's operations are producing sufficient cash to cover its expenses and generate profits, which is a crucial indicator of financial health. The company's debt level and interest expenses have undergone significant changes over the past period. In terms of debt level, while there is a slight increase in total debt from $513.4 million to $520 million, it is not substantial enough to raise concerns. The cash balance has also increased to $181.7 million, indicating that the company's liquidity position remains healthy. Regarding interest expenses, there are notable decreases across various metrics. Interest expense net decreased by -$300,000 and $0.3 million, -5.6%, while interest paid decreased from $0.7 million to $0.2 million. The amortized interest expense remained constant at $3.2 million. These reductions suggest that the company has successfully managed its debt obligations and reduced its interest expenses. The financial summary reveals a strong performance from the towable RV segment, with notable increases in net revenues, operating income, and unit deliveries. Specifically, travel trailer and fifth-wheel unit deliveries saw significant growth of 11.3% and 14.3%, respectively. In contrast, other segments or regions did not have specific performance metrics mentioned, leaving their performance unclear. Management's outlook, focused on revenue growth and liquidity management, is cautiously optimistic about the company's outlook, citing revenue growth through contracts with customers as a key driver. Despite macroeconomic concerns, they expect consumer demand to stabilize and dealers to return to normal ordering patterns. To mitigate risks, management is taking steps to lower field inventory, improve working capital, and align production with market demand. The company believes it has sufficient liquidity to meet its current needs through cash flow from operations, existing lines of credit, and access to debt and capital markets. Management is focused on generating revenue, managing liquidity, and innovating new products to drive long-term growth. Despite economic uncertainty, they remain confident in the health of consumer demand for RV and marine products. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. Specifically, the company has paid out dividends totaling $10.3 million, as noted on page 4 of the report. Additionally, multiple pages within the document confirm that the company has also invested in buying back its own shares. Concerns about inventory buildup are evident in the financial summary. The data on page 14 and page 22 explicitly states yes to inventory buildup concerns. Furthermore, the numbers on dealer inventory units show a mixed trend, an increase from 15,211 to 17,407, but a significant decrease of 19.3% from 3,994 to 3,223. These statistics suggest that while some areas are experiencing inventory buildup, others are seeing a reduction in stock levels. That concludes the financial summary for Winnebago Industries Inc. Feel free to comment below, and I will be happy to answer them when possible.